Today I would like to analyze Lululemon. It's one of the biggest high-end athletic clothing company known for yoga pants, leggings, and other active wear for both men and women. They also sell products for running, training, and casual wear. So here we can see some of the products. And they mostly sell through its own stores, websites, and wholesale partners. So most of the revenue comes from the direct sales to customer, especially online. And they are known for high quality, comfortable, and stylish clothing. And they also have a strong customer loyalty and premium brand image. Now, when we take a look at the chart, we can see in 5 years they have a strong performance with 70% profit. When we take a look at the 1 year chart, we can see we are down close to 22%. And the 6 month chart, we are up 25% again. So we have a strong recovery already. And in the 1 month chart, we are also up 26%. So now the question is this company still overvalued or is this company fair valued? So we have to take a look at the financials to find out. The first thing we can recognize about this company is the big market cap of 49.7 billion US dollar. So it's already a huge company and is maybe have a limited potential to grow in the future because it's already very big. Now we're going to take a look at the financial foundation. The first thing we are looking for is revenue growth over the last 5 years. So we can see here in 2020, the revenue was around 4 billion US dollar. Then we have a 10% increase over 2021. Then we have a very strong increase around 42%. Then again, 29% increase. And then in 2024, again, 18% increase, which is very strong revenue growth. We have to say that. So it's a check here. So the next thing we are looking for is free cash flow growth over the last 5 years. This is a very important number because with the free cash flow, we can pay the dividend or we can pay the stock buybacks. So we would like to see that grow over the last 5 years. So we can see here in 2020, it was around 386 million US dollar. Then we have a growth over 48%. Then we have a growth again in 2022 over 73%. And then in 2023, we have a decline of 67%. So this is a lot. And now in 2024, we have an increase again. And we have the highest free cash flow in 2024 with 1.64 billion, which is a good growth over the last 5 years. And it's a check here. The next thing we are looking for is free cash flow yield over 4%. So this also can indicate the valuation of this company. So if the free cash flow yield is under 4%, it could mean the company is overvalued. So the only reason to buy this company then if this company has a really good free cash flow growth. So this is an argument to buy this company then. So what we're going to do now is we're going to take the free cash flow. It's 1.64. And then we're going to divide it with the market cap of 49.7. So this is how we're going to get the free cash flow yield. So the number we get is 0.0329, which means round about 3.29% free cash flow yield. So it's under the 4%, it's not a check here, but we also know this company can grow the free cash flow many years already, so it still can be a good potential. The next thing we are looking for is debt to free cash flow ratio under 5. So what does this mean? This means that they can pay back the debt with the free cash flow in under 5 years. So what we're going to do now is we're going to take a look at the debt. First, we're going to take a look at the short-term debt. Here we can see it's 249. And then we're going to take the long-term debt as well. It's 1.15 billion. So roundabout, this is around about 1.4 billion in debt. So we're going to take this number, 1.4. And then we're going to divide it with the free cash flow. It's around 1.64. So this number will look quite good, I would say. Okay, 0.85. So this means in under 1 year, we can pay back the debt with our free cash flow. This is a really good number actually. So it's a check here. And we also can take a quick look at the cash on hand, because it's also important to finance the dividends or finance the stock buybacks with the cash on hand. We can see here they have 2.24 billion US dollar cash on hand, which is a very big number. They can already repay the debt with this. They can invest in the business. So from the balance sheet, they look really good actually. So the next thing we are looking for is shares outstanding decrease. So this means the company buys back their own shares. So we're gonna take a look here. We can see that Lululemon did buy back their own shares since 2014, and it mostly over 1% and sometime even over 2%, which is very good actually. So we have to keep in mind as well that it's not good if the company buys back their own shares if the stock price is overvalued. So if this very overvalued company and they buy back their own shares, it's not really good. But actually we would like to see they buy back their own shares, because this can definitely help the stock price to increase. So it's a check here as well. I would like to give my conclusion about this company. So let's start with the positive things. So they have a strong revenue and a strong free cash flow growth. So this is really good. Many years they could grow the revenue and they could also grow the free cash flow. The next thing would be they have a very great balance sheet. This means they have a low amount of debt and they can pay back the debt with the free cash flow easily in under 1 year. And they also have a good amount on cash on hand. So they have a lot of money in the bank that they can invest in the business, pay the dividend, or buy back their own shares. So the negative would be for me the valuation. I'm not sure it's a high valuation. So for me, if they can keep growing the company and keep growing the free cash flow and the revenue, then the valuation is maybe even cheap. But if they cannot keep going with the growth over the years, then the valuation could be high right now. The next thing would be for me that this is a hype market. So this means the clothing can be popular today, but maybe tomorrow the clothing would be not so popular anymore. So it's a lot about the customer and if the customer likes the products. So it's a very difficult market in my eyes. So I personally would not invest in this company, but I also think it has a lot of potential if they can grow the brand even more in the future.